Good morning, everybody. Hopefully you had a good week and you caught some of the rains, and hopefully we get some more this weekend or early on Monday and continue to see crop conditions improve here in east central Illinois. Markets were sharply lower on the week. We had a very volatile week with a lot of news that came out. December 22 corn was down 66 cents, and November 22 soybeans were down 30 cents on the week. For soybeans, we closed on Friday at $13.95 on the November contract. We had a lot of high selling volume after the report on Thursday and into Friday, and really caused a lot of support levels to be lost. We rallied actually early in the week and tested 1508, where both the 50 and 20-day moving averages sat, and we hit that, and it rejected pretty sharply and sold off hard into the end of the week. Strength is oversold, but the money flows do have some more room to move lower, and long-term momentum is negative and continuing to move lower into negative territory. Price closed on Friday below the $14 support that has been really key since February. We've tested it 8 separate times, and we closed below it. So what I would really like to see to stay here is to get back above $14 and base there and try to wear off some of these selling conditions, and hopefully we can hold that support level. Otherwise, my next good support level is all the way down at 13.21, where we broke out on this November contract earlier this year. Managed money sold another 29,000 contracts through this past Tuesday and likely dump more through the end of the week. They are net long 124,000 contracts still, but they have been liquidating quite a few. In regards to corn, we closed the week at $6.07. We are trading well below all the major moving averages on the December corn contract, and we're actually $1.10 below the 50-day moving average. We've had a lot of high selling volume in this contract, and support levels have kind of been melted through pretty easily. Strength indicators are oversold, but money flows still have room to move lower. Support is where we're at currently, 607, and then my next support lower is at $5.78 on the December contract. Long-term momentum continues to decline and moves lower, so hopefully this will start to flatten out and bottom out and potentially move up at some point, but we need to really start basing at support levels before that can happen. Managed money sold another 37,000 contracts through this past Tuesday, and our net long 228,000 contracts. We have a partnership with Hedge, and Dwayne Kistner over there has done a really good job, and he can help you put together a profitable grain marketing strategy to help you kind of take some of this emotion out of your grain marketing decisions. Please give us a call if you have any interest in having a conversation with him, and we can initiate that for you. In regards to general updates, managed money continue to exit commodity markets over the risk of global recession and better weather in the short term. However, long-term weather models are still showing a very hot and dry conditions to get even worse starting in mid-July through September. So we will just have to see how that plays out. But in the short term, commodities have struggled because of good or relief in the short-term weather markets. Crop condition ratings on Monday showed a decline in good to excellent ratings. Corn was down 3% to 67%, and soybeans were down 3% to 65%. Illinois and Iowa have good ratings, but other states that do produce a lot of corn are struggling. World-ending stocks are historically tight, and so that's going to put a ton of pressure on the U.S. to grow a record crop in 2022. So if the weather does turn south and it doesn't look any better, surely we could see some relief or rallying back in commodities. But in the short term, we were at quarter end and month end for these hedge funds and index funds, and they take a lot of profits at those points as well. Traders were risk off before the 3-day weekend, and we are entering an important weather period, so expect a lot of volatility on the open on Monday night and see what managed money is doing, and a lot of that's going to be tracking what weather is doing. Managed money was extremely long commodities here and to hedge against inflation, but they have been exiting these positions and are starting to sell those contracts now. The USDA quarterly stocks and planted acres report was on Thursday. Grain stocks were slightly higher than trade estimates, and then corn acres came in about 500,000 acres above the March report at 89.9 million. Soybean acres came in at 2.7 million acres less than the March report, so that was a little bit of a surprise. We expect the USDA to revise these acreage numbers at some point in time. Illinois soybean acres were record large at 11.2 million. So overall, the report was pretty neutral on corn and was bullish for soybeans. In regards to crop insurance, we are ready to certify your acres for crop insurance coverage. We need to get your acreage reports signed and match them up to the 578s. Please have the FSA send us that form, or we can arrange to pick that up from you. The deadline to report acres is July 15th. The sooner the better, because we don't want any errors, and if the 578s are incorrect, we need to make sure those are fixed before we get our acreage reports signed. If you have any questions or comments, please reach out to Larry, Susan, or I. We want to thank you for your business and hope you have a great 4th of July weekend.